When it comes to ETFs, oftentimes you're going to hear people talk about Vanguard ETFs like VU, VTI, and VGT, or Schwab ETFs like SCHD, SCHG, and SCHB. And that's no surprise since they have some really great ETFs. But I think Fidelity is really overlooked when it comes to the ETFs that they have to offer. And in this video, I'm going to go into the top 5 Fidelity ETFs that can make you very rich over the long term. So let's get to it. This first fund is FTEC, the Fidelity MSCI Information Technology ETF. Technology has been one of the best performing sectors of the stock market, with expectations for continued growth into the future, making this a sector that's key to have some type of exposure to for its growth potential. FTEC seeks to track the performance of the MSCI USA IMI Information Technology Index, which represents the performance of the information technology sector and the US equity market. So this index is made up of companies that are operating across the information technology sector. And FTEC invests in growth and value stocks of companies across diversified market caps. And it contains a total of 284 holdings, with its top holdings in names like Nvidia, Microsoft, Apple, Broadcom, and JP Morgan Chase. You can see the top 3 holdings make up a huge portion of the fund at around 45%, and that's due to the market cap weighting methodology of the fund. As for the sectors, this fund, as you would expect, is mostly fully exposed to technology, with a sprinkle in communication, industrials, and others. FTEC has a dividend yield of 0.44%, which it pays out quarterly. A small dividend, but given the nature of many of the holdings, this is to be expected. For the fees, FTEC has an expense ratio of 0.08%, meaning you'd be paying $8 for every $10,000 invested. Getting into the performance, the technology sector has experienced some massive growth over the past few years, offering some of the most rewarding returns. FTEC has 5-year annual returns of around 20% and 10-year annualized returns of over 21%. Take a look at this chart of FTEC versus an S&P 500 fund like VU over the last 3 years. Those are some crazy returns. FTEC is an extremely well-performing tech ETF that I think could make a long-term core addition to a well-balanced portfolio. And it could be a good way to seek out some exposure to that nice growth potential. This next fund is FBCG, the Fidelity Blue Chip Growth ETF. Now, this ETF is an actively managed fund that invests in growth stocks across different market caps. The fund has a strategy of employing fundamental analysis with a bottom-up stock-picking approach to create its portfolio. And to protect the stock picks, the ETF doesn't report its holdings daily, and instead provides a tracking basket that represents the performance of the ETF, which may have different or missing holdings. FBCG has around 181 holdings, and its top holdings are in companies like Nvidia, Apple, Amazon, Microsoft, and others that you're likely familiar with. These top 10 holdings make up 60% of the portfolio, and you can see there are some pretty high weights in the Mag 7 stocks. The top sectors that make up FBCG are technology, which is no surprise, then consumer discretionary, and communication. This fund has an expense ratio of 0.59%, costing you $59 for every $10,000 invested. You're going to be paying those higher fees for those actively managed funds. Now, this fund has shown some pretty solid returns since it's been around. Since its inception in June 2020, it's had annual returns of 19%, and over the last 3 years, annual returns of just over 30%. If we compare this to some other great funds over 3 years as well, like Vanguard's VUG, Schwab's SHG, and Invesco's QQQM, it managed to stay above the rest. If you're a more aggressive investor that's looking for a fund that has the potential to beat the market with its portfolio of aggressive growth companies, then FBCG could be something to look into, with a strategy that's actively managed and its heavy tilt on the Mag 7 and other supporting growth companies. Now, this next one is different from any other fund on this list, and that's FBTC, the Fidelity-wide Origin Bitcoin Fund ETF. FBTC was created in 2024, and it seeks to track the performance of Bitcoin through the index called Fidelity Bitcoin Reference Rate. The index is structured using Bitcoin price feeds from eligible Bitcoin spot markets and a volume-weighted median price or VWMP methodology, which is calculated every 15 seconds based on VWMP spot market data over rolling 60-minute increments. Fidelity calls this an easier path to crypto, which for many investors, it does simplify things a bit by having the ability to have Bitcoin exposure through an ETF. Fidelity uses self-custody for FBTC's Bitcoin holdings, and Bitcoin self-custody means taking personal responsibility for managing and securing your Bitcoin, which in the case of investing in this ETF, that's on Fidelity. So no need for you personally to have to keep hold of your keys or seed phrase for your crypto wallet to risk losing your Bitcoin. This fund has an expense ratio of 0.25%, costing you $25 for every $10,000 invested. And keep in mind, having an expense ratio will cause some underperformance over the long term versus owning Bitcoin directly. The performance for Bitcoin has been nothing short of amazing. In the past year, FBTC had returns of around 75%, and since its inception in January 2024, total returns of around 167%. Investor sentiment in the crypto market has made a huge shift following the passing of the Genius Act and regulatory improvements that provide more legitimacy to stablecoin issuers and the broader cryptocurrency ecosystem. And this ETF is a pretty cost-efficient way for investors to get exposure to the world's largest digital currency, which to this day continues to dominate the crypto market and provide outsized returns. This next fund up is FELC, the Fidelity Enhanced Large Cap Core ETF. This fund is an actively managed ETF, so the team of portfolio managers are actively choosing and adjusting the holdings of the fund. The stocks in FELC are selected and weighted based on valuation, growth, quality, and other factors, with at least 80% of the fund being invested in S&P 500 companies. You can view this fund as a more trimmed, lean, and growth-oriented version of the S&P 500. FELC has a total of around 202 holdings, and its top holdings consist of Nvidia, Microsoft, Apple, Amazon, Meta, and others. And the percentages of most of these top 10 holdings are larger than what you'd find in S&P 500 funds. For the sectors, this fund is exposed to technology, financials, communication, consumer discretionary, and others. FELC has a dividend yield of 1.01%, which is dividends are paid quarterly. And it has an expense ratio of 0.18%, which is a little high, but keep in mind that this is because it's an actively managed fund. Something to keep in mind is that FELC used to be an index fund up until November 20th, 2023, so when it comes to the returns, anything before that date is the index fund, and the returns will be slightly different since the expense ratio used to be higher than what it is now. For the performance, FELC has had 5-year annual returns of 17%, 3-year annual returns of 19%, and then total returns of 42% since November 2023 when it became an ETF. If you're looking for an actively managed ETF that's focused on the S&P 500 and attempts to beat the index, then this could be an option for you. A trimmed down version of the S&P 500 could offer the opportunity for higher returns, and that's essentially what you're asking for with this fund through its active management. This next fund is FDVV, the Fidelity High Dividend ETF. FDVV tracks the performance of the Fidelity High Dividend Index, and it invests in mid and large cap high dividend paying companies that are expected to continue to pay and grow their dividends. FDVV contains a total of around 120 stocks, with top holdings in companies like Nvidia, Microsoft, Apple, JP Morgan Chase, and Broadcom. And the top sectors of FDVV are technology, financials, consumer staples, and real estate. This ETF gives you some pretty nice exposure to tech and some of the big players in the AI market. For the dividends, FDVV has a dividend yield of 3.04%, and its dividends are paid out quarterly. And it also has a 5-year compounded annual dividend growth rate of 7.6%, so it's nice to see that it offers some decent dividend growth on top of that yield. Jumping into the fees, FDVV comes in with an expense ratio of 0.16%, costing you $16 for every $10,000 invested. This fund has shown some good performance with returns of just over 12% annually since its inception in 2016 and over 17% in the past 5 years. FDVV is a nice combination of growth and value in a dividend ETF, And it could be a good option for someone that's looking for a fund that offers some tech exposure while still maintaining a nice dividend yield, dividend growth, and solid returns. And if you want to learn about some other ETFs that can help grow your wealth faster, then check out this video here. Or if you want to see how to build a solid ETF portfolio with different ETFs, then check out this video here. Be sure to like and subscribe if you enjoyed the video. Thanks for watching, and I'll see you later.